In this video, I'm going to do a day trading review for crude oil on October the 29th. The strategy is trendline break or the trendline support. Based on the daily chart, there are two good opportunities. The first one is when the market forms a wedge, it's breaking the wedge bottom trend line and leading to a second leg here. The opportunity is the second leg here for sell at 850. The second good trade happened around 1050, so there is a bottom trend line here, and then it hits the support line and then bounce back, leading to another good buy opportunity. Let's first take a look at the first trade. We can draw a trend line here at the top of this high, and also we draw a bottom trend line here. We can see it is a wedge. For the wedge shape, we're looking for the breakout of either the top trend line or the bottom trend line. That's the setup. Around 8 o'clock, it breaks the bottom trend line, so the setup is there, and then we need to wait for the second leg for the trading. It goes down for a consecutive bear bars, and then it reacts a little bit. So we know at this moment we're waiting for the pullback, and then we are waiting for a signal bar to do a sell trading. Right after you see this bull bar, you know that the pullback is going to happen soon. And then let's wait. The next bar is a bear bar. It's not a good signal bar because the body is too small and the tail at the bottom is very large. And then the next bar is a bull bar. It's not a good signal bar for sure. And then the next two bars are doji bars. Normally, doji bars, even if the body is leaning toward either up or down, they won't serve as a very good signal bar, either buy or sell. And then the next bar is a bear bar. This bar is a very good sell signal bar because the body accounts 80-90% of the whole bar, and the tail at the top is a little bit larger than the tail at the bottom, so the body is leaning towards the bottom. So this is a very good signal bar. Immediately after you put your sell order at the bottom of this signal bar, the next bar, it triggers the order. So you're in a sell position. And right after that, you need to put your stop at the pullback. So it's at the top of this doji bar. Where do you take your profit? Since it is a breakout of the wedge shape, so normally we'll do a measured move. This is the first leg. And then we assume the second leg should be almost or roughly the same as the first leg. We move it down from the top of the pullback, so you can see that roughly it's here. And then the market goes down to the measure move as well. So this is where you want to take your profit. You might ask whether there's a third leg for me to continue holding the trade for more profit. So it really depends. From the previous day's chart, you can see that for the crude oil, there are a lot of daily reversals. And then the third leg, the probability of the third leg is not that high. So at this moment, it's better to take the second leg only. And then this day's chart is also a very good example that it will reverse back. And also, you might argue that here is another pullback. So this is a small second leg, and then this is the third leg. So it really depends on your see this. When the market goes up to make a higher high here, comparing to the previous pullback, you know the downtrend is over, because the definition for a downtrend is the market continues making lower lows and lower highs. And second, because the downtrend is over, next is could follow by a range. And then the third, if we want to trade again, you need to wait for the new setup. Let's draw some new trend lines. First, we want to connect this point with the higher high here. And also, we can draw another trend line based on the pullback here and the higher high. At this moment, there's nothing at the bottom. And then if you want to draw a trend line, but there's nothing, you can do a parallel. So just copy this, do a parallel, and down here. You can see that the market in the end goes down here and they hit the parallel trend line and bounce up. There's another technique you want to know. Again, when it hits the bottom trend line, we're waiting for a buy signal bar. So this bear bar and then next bar is a bull bar. So again, the body accounts for almost 80-90% of the whole bar, and then the tail at the bottom is much larger than the tail at the top. So this is a very good signal bar. After you place your buy order at top of the signal bar, it didn't get hit the next two bars. And then in this bull bar, your buy order is triggered. And then you can put your stop at either the pullback or the bottom of the daily low here. That is because when the trend goes down to lower than this daily low, that means it's not uptrend anymore. So your buy strategy is failed. Where do you take your profit? So there are a few targets. The first target is that based on the trend line here, we can take the first target at the trend line. That's because at this moment, we're not sure whether the trend can goes up to make another higher high comparing to this high. And the second target is we have extended this trend line here. So it's a probability that it's gonna hit this trend line. So you can see that when it hits the trend line here, it bounces back. That means the market respects it. The third target is basically the top of the previous high here, or even the previous daily high here. And also you can see the market reaches the daily high, it tested it. You can take a profit here, or if you can sell half of your position here and keep the second half go up to the trend line here, or even if you can sell another 1/4 of your position and keep the 1/4 for a swing until the daily high. It really depends on your strategy. Hope you enjoyed the video. Thank you.